Hello. Can you hear me?
Hey, hey, Martha. Yeah, we can hear you. Where are
All
you
right.
broadcasting from today?
I'm broadcasting from my private residence. I have a big workshop, a big office here and a studio production. And I'm working from here. It's beautiful. We have elks coming into the backyard, and my Anatolian shepherds are trying to keep them at bay. So it's a beautiful, soft day here, a little bit of clouds. Very nice.
What state are you in?
I am outside of Seattle, Washington.
Oh, nice. Yeah. Um, Sounds like my house. I have to shoo away the deer when I want to go out deer hunting. Yeah, they
Yeah.
crowd around the driveway.
Yeah, my property is 14 acres of forest land. I'm a forester and designated forest land. And I share the part of the property with the wildlife that comes from above, where they've been taking down all the forests and everything to build condos and things like that up there. So I share my property with cougars, bobcats, elk, deer, all kinds of animals, raccoons, everything. I just have the two Anatolians that keep them beyond where they're not supposed to come into a certain area where I live. So it's very
Well,
exciting to be here.
well, be careful. You know what Cougar's favorite food is?
Well, I've lived with cougars for 40 years, so I'm very much aware of how they behave. And this new young one, my old one died because he got brought in teeth, but this new young one has four cubs, but she knows to stay far away because the Anatolians, the pair, can actually do harm to her. So she stays quite a bit away, but she is beautiful. She's just beautiful.
So you want to know what the best cougar strategy is?
I
Wear
don't
a
know.
backpack because a
Wear a
cougar
backpack.
will never attack a shape it doesn't recognize.
That's a good point. That's a good point.
And I've been backpacking for 50 years in the Sierras, and I've seen lots of cougar footprints, but none ever bothered me.
Oh yeah, I think they're very wise animals.
They're very smart. Anyway, go ahead and get your PowerPoint up. Um,
Okay. I have it open.
I see you.
Okay. Uh,
Martha is the CEO and co-founder of TechnoTrader and a retired professional buy-side analyst who has been educating traders and investors since 1998. She is a longtime charter holder of the CMT designation earned with her thesis, Cycle Evolution Theory, and her concepts are the bedrock of TechnoTrader trading education. Please welcome Martha Stokes. So,
can you?
Martha, I see here trading as a business.
Yes.
So you are good. I'm going to go ahead and mute myself. You have until 5 minutes before the hour.
Thank you. Good morning, everyone. Trading as a business is something that I think all of you should consider. It's something that I teach that no one else does. We're talking about professional mindset, consistent results. It is very important for retail traders and semi-professionals and professionals to develop a consistency in their trading so that they can make income monthly or augment a retirement. As always, everything about what I'm speaking today is educational only. It is not an investment. I don't recommend stocks. I teach you how to find your own stocks before everybody else is running to get into them. So you already have my credentials. These are my credentials. We have a nice gift for you at the end, so stay tuned because you will learn a lot today. Please take notes because I am an educator. Trading as a business. Trading as a business is an opportunity to make monthly income from your own home in your spare time. A lot of people are finding it kind of difficult right now to make ends meet. I see an 86-year-old every day clerking at the Safeway store I go into, and I think, my gosh, what is she doing? More Americans are feeling the pressure of a harsh reality as inflation and taxes keep rising and the uncertainty about their future and their retirement. A pension plan from an employer is no longer enough. Retirees and those who are planning to retire in the next decade or sooner have limited choices to maintain the lifestyle they have become accustomed to. Trading as a business is a simply easy solution. It is something anyone can learn. It can be a part-time at-home adventure. It takes as little as a few hours a week to generate income to maintain the final financial security growth for years to come. I want to talk a little bit about the stock market. You can trade any financial market via the stock market derivatives. Trading as a business takes the worry and frustration out of retiring into an uncertain future. Trading as a business is approved by the IRS and other nations. If I have foreign people from other countries, it is also approved there. Nobody wants to be begging groceries at a store. Nobody wants to drive in rush hour traffic to a workplace and spend hours in a low-paid job after they retire or even before. Trading as a business doesn't have to be an 8-hour, 5 days a week. It can be as little as a couple of hours, 1 or 2 days a week. I have a lot of students that do position trading. Trading as a business has far more flexibility than owning any other type of small business because it is a small business. It provides an exciting and fascinating way to increase your income without the hassles of being an employee or employer. The hidden world of professional traders. Today, you are going to learn what separates you from the professional traders who make high incomes, but are invisible to you as they keep a very low profile deliberately. These are actively trading traders right now, not retired people or others who have gone the educational path. The true professionals are not gurus or self-proclaimed experts. They are never on TV, nor are they give any interviews. I know lots of them. However, they are the most important market participant group for your success. Right now, you're trading against the pros, I can guarantee it. True professionals are the most talented, skilled, and successful traders in the world. Why aren't you trading with any of the professionals? Because you do not know how to recognize their footprints in stock charts. Trading as a business was an IRS ruling that was approved in the late 1990s because the tax laws required that every taxpayer be traded equally. But most retail traders have never heard of this unique tax status for semi-professional retail traders. The IRS and many other countries provide the same tax status given to professionals to retail traders who make their trading business a business, not a hobby. The IRS calls you hobby traders. That's not a very nice statement, but you are. And trading stocks should be an enjoyable adventure that also ensures your financial security. It's consistent success. It's consistent trading. One fact that most traders are shocked to learn from this is that it takes fewer trades to make consistent profits to exceed what you are trying to make now with hundreds of trades. Less is more when trading as a business. Why? Trading as a business creates higher profit potential with much lower risk because you are trading like the professionals who are trading today. And I can see that all 3 indexes are up today after a little bit of a down yesterday. Trading as a business versus how you trade. When you trade as a business, you can take off all of your expenses related to trading. Right now, you can't take off any expenses at all. None. You're a hobby trader. Your charting software is fully tax deductible. All of your professional level education expenses are fully tax deductible. So you could buy a professional style course and it's completely tax deductible, so you can write it off, so you end up paying nothing. You're probably working on charting software. You may not have a professional level. You may have a level 2 or level 3, but that is now deductible. If you're not trading as a business, it's not deductible. Your coaching or training from a certified professional is fully deductible. All of the stuff can be written off. Your office space in your home, the electricity related to that, water, sewage, phone, computers, tablets, repairs, maintenance are all deductible. If you have to re-roof your house, the percentage that was over your office space is deductible. You do not need to document each and every trade and for tax filing. Right now, when you make a trade, whatever, whether it's stocks, options, derivatives, commodities, whatever, you have to itemize on a schedule every single trade, what you paid, and then what you lost, and then you get a capital gain tax. Not a good idea. The stock you trade are your inventory, not individual stock transactions like you're doing right now. This saves you huge amounts of time and money. Inventory. So at the end of the year, you add up all of your sales. Then you subtract all of the cost of that purchasing that stock. It's a one-line transaction, one total summary. How much money did you make versus how much did you spend? And the net amount is just one item on your tax statement. It is really cool. Students love it. The stock market. The US stock market is the largest in the world by a staggering amount. If you added all of the 200 plus stock markets in the world together, combined, and then compared them to the US stock market, the US stock market is still ginormous. It is the center of the universe of the financial world. It is what makes everything happen. It has the top Fortune 1000 corporations in the world. Nobody has that number of corporations except the US. It's a staggering number. And at any time, anywhere from 6,000 to 10,000 stocks, ADS, ADRs, and derivatives and instruments, you can trade are in the stock market. So if you're a beginner and you're just starting out, start with the stock market and then move forward if you choose to. The US also has the SEC Midas computer, which monitors the entire market, and the Consolidated Audit Trail, which was developed after the May 10th, 2010 flash crash, and the SEC reversed all of those losses because it was a fat finger fundamentalist trader from the professional side that used a VWAP order rather than a TWAP order. VWAP, volume weighted at price, accelerates the speed of selling, and he actually lost his job, and the company that he worked for was fined a huge amount of money. Both protect everyone who has investments or trades in the US markets from fraud, corruption, corporate insider trading, and much more. The US also has the largest financial markets in cryptos. We developed cryptos, Forex, because the dollar is the foundation of everything. Options, commodities, futures, bonds, credit, alternatives that are coming out that you haven't seen yet, digital assets which are coming out and you haven't seen yet, and non-fungible tokens, and everything is going on. So it's a massive thing. It's a massive thing. Do not underestimate the power of the US stock market. The world trades the US market because of the huge possibilities for success and security of rules. Test your knowledge. How much money changes hands in the US stock market every day? Anybody? $350 to $400 billion per day. What speed of execution does the professional side use regularly? You are on the minute scale. You may get triggered faster than that, but the market makers have the right to hold it for a minute. Millisecond routing. They're trading on the millisecond. How many milliseconds are in a second? 60,000. How many are in a minute? 320,000. It's huge, and you underestimate its power. What venues do the professionals use? Off-public exchanges called alternative trading venues are dark pools, often called dark pools. So you're looking for dark pools and you're thinking, oh, we found a whale. Oh, wow, it's so big, 500,000, 100,000 share loss. We found a whale. Well, that was back in 1950s when they were stockbrokers called up doctors and attorneys and professionals and tried to sell them the list of stocks that their company was telling them to sell. That's not appropriate anymore. What is the projected global asset under management for this year? Are you ready for a shocker? $200 trillion. You think they're worried about, and this asset management is under the dark pools and the global asset management companies. You think they're worried about the debt ceiling of the US market? of the US government? I don't think so. After expenses, how much money did you make last year? You have to calculate a wage for yourself. Are you worth 10 bucks an hour, 50 bucks an hour, 100 bucks an hour, 500 bucks an hour? How much are you worth? That's an expense. Time is money. Time is money. So be aware of that. How much money did you make? Did you break even? That's not consistency. That's not success. How do you start trading as a business rather than a hobby? First, you need to accept that the market is not one-dimensional. It is not Wall Street versus Main Street. Oh, Wall Street's really killing the Main Street guys. It's so awful. Get over it. What you need to understand is where you fit in with the highly complex, multi-tiered market. This is one of those rare instances when do-it-yourself doesn't work. You can spend 10 to 30 years, and I have students that come to me after that much time, trying and then finally accept that you need to get a real education from a credentialed professional. Part of this professional level education is trading as a business. So we have all these tiers. You're way up here and you can't see the dark pools down here or the sell side institutions or all the professional traders or some of the foreign companies, foreign investors that are going on. You have access to HFTs, maybe a little bit. They gap up things, and that's about it. You must accept the fact that what is available on the internet is missing 80% of what you need to know and learn. So I'm not going to go into this very hard. I show this every time I do it. This can be, this line up can be intraday, day, weekly, monthly, yearly. It's always the same. Buy-side institutions, also known as dark pools, are where you need to be paying attention. Professional traders, there's 3 different groups. Some work for the sell side, some work for the buy side, some are independent. They matter. Right now, corporations, 486 of the Fortune 500 companies have buybacks going on. Want to know why the market's going up today? Really? You think that is retail news is going to tell you, oh, it's because the retail news, people are buying? No. There's low liquidity right now. There's very low liquidity. It's buybacks that are pushing the market up. And this is the downside. Buy-side institutions start slowing it down. But what happens first is they see, oh, this company is Boeing is going into a market saturation phase. It's got lots of issues. So we're lowering inventory on it. They'll never sell it out. They own 4,000, 5,000 of all the stocks that are listed, but they rotate their money around. So they lower inventory. And sell side sees that and they go, wow, sell short opportunity. Professional traders go, wow, sell short opportunity, because they see it happening. So they all line up and they all get ready. They can do it on the millisecond and they can cancel their orders at any time. Meanwhile, you're hoping to buy on the dip, or maybe something will go up. I'm just sure this is that, or whatever. And you hold off. Small foreign funds and small investors keep buying on the dip. Buy-side institutions are selling. Then all of a sudden, retail traders go way down here. You go, oh, well, maybe we should start selling short. But you're selling, and buy-side institutions are buying. And they know that at this point, this company is going to have a big turnaround and it's going to start moving up. They stop. They slow down the selling. They start building the bottom. Small lot investors capitulate. Odd lot investors capitulate just as it starts to turn. That's what happens. Foundation of knowledge. There are 6 primary market conditions. Bottoming market. Platform market. Moderately trending up or down. Bottoming market is controlled by dark pools. Write it down. Buy-side institutions control the bottom. They're long-term investors. They're holding for the long term. They buy before their earnings are positive. Why? Because they send one of their analysts down to the CEO or CFO, wherever the headquarters are. They send all these analysts out, professional, that work for the buy side only, not the stuff you see on the retail news. They analyze, they talk to the CEO. The CEO opens up the office space and shows them what they're doing, talks about their new technologies. The CFO shows them all of the books and records, can tell them how the next earnings season is going to go. They have to be honest or they go to jail. So they show it so they know. So the dark pools go, oh, yeah, this stock is a bargain. It's below its fundamental values. Platform market is also controlled by dark pools, and we're going to have a platform market condition coming here pretty soon because we've had some speculation. We need to pattern it out. So they'll slow it down because they ping on it. I'll talk about that in a minute. Moderately trending is what we have right now. It's starting to go into a velocity market condition. Who creates the velocity? Retail traders, small funds managers, speculating and gambling. There's a whole slew of young adults that are in college-age students that are using their smartphones and they're buying and selling stocks. They're gambling. It's creating all this intraday volatility. They haven't got a clue what they're doing. They're losing huge amounts of money. Topping market conditions, the dark pools start the top. It slowly starts to round and slowly starts to round and round and round. And then there's the flat tops. There's the rounding tops. There's all kinds of new tops that are developing. Velocity is sheerly up or sheerly down. Trading ranges are rare for the indexes, but common for stocks. A stock gets stuck. It hasn't reinvented. It's going sideways. It's going sideways and going sideways. Verizon is a fine example. It's like, what the heck are you doing here? Are you going to reinvent, or are you going to wait on your laurels and hope that because you're charging all of your customers more and more money that they're going to stick with you? I don't think so. Which market conditions is unique? Each market condition is unique. The trend line patterns are different. There are three primary trends: up, down, and sideways. Okay, there's no such thing as neutral. The market is always moving. If it's moving sideways, it's in a correction mode. Trend line patterns are critical, and I don't know anybody else that teaches them, and each one is different for each market condition. This is because the different market conditions are created by different market participant groups dominating and controlling how price moves up or down. Bottoming markets are slow because the dark pools are buying as the company is improving and coming out of its market saturation phase into its new technology phase. Platform markets are because everybody's scared to death the market's going to crash. Oh, the market's going to crash. Oh, the market's going to crash. AI is a bubble. Are you kidding me? We're in a very young, great bull market. When was the last great bull markets? There's only been three. There's only been three. 1920s, 1980s to 1990s. And now. And why? Well, in the 20s, they had 5 new technologies. In the 90s, they had 6 new technologies. How many new technologies are coming to market right now? Emerging right now, R&D into market acceptance phase. Over 20. AI is helping grow that, but AI isn't the ultimate. AI is just a tool. Market condition is your roadmap for navigating the market activity over time. You have to adjust and adapt to each market condition. Fortunately, they last quite a long time, so you can use those as you go over time. We have a great bull market. It's going to be moderately trending up, then it's going to move sideways for a while, then it's going to move up, then it's going to correct down a little bit. You will trade differently in a velocity market than in a platform market. The stock market cycles, and each market condition is a different part of that major cycle. I wrote cycle theory. I wrote it on the market conditions and the market structures and all of these things. And I'm told I'm one of the experts in the area in the United States. I don't know. I don't pay any attention to that. Within each market condition are trading conditions that define your strategies you can use. Ever had a strategy and it was working great, and then all of a sudden it stops working? What the heck? You're going, why isn't it working? Because the market condition changed. Who controls price? The number one market participant group is buy-side institutions, also called dark pools of liquidity. The buy side are the most powerful, dominant, and hidden group in the market. There are about 20 to 25 giant buy sides today. Dark pools do not create momentum runs. Write it down. They do not create momentum runs. I'm having an ongoing argument with a Quora a person who follows me, and I'm going, no, they don't. They do not create volatility. Price is controlled to the penny spread. They set up time-weighted at price orders to slowly accumulate stock over extended periods of time. So their activity is mostly dominant in bottoming and platform market conditions. So the dark pools create buy zones that develops into a bottoming formation. So they're sitting down here at a certain price and you're selling short or you're selling in capitulation and they're just going, bing, 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 and they're buying. They're on the ATS venues, so you can't see them in any level. The number two and most important ones, and the ones you should piggyback off of, and the ones you should follow and admire, are the professional traders. There are three categories of professionals you must learn about and learn to emulate. The buy-side professional floor traders who strike the penny or half penny spread. All of their orders are off the public exchanges, hidden in ATS venues. You never see their activity if you are a retail day trader, options trader, or whatever. It's not visible. Deal with it. And the reason is because the buy-side institutions are the fiduciary holders of the vast wealth of the middle class of America. And their job is to protect those 401ks and IRAs no matter what. And they do. Okay? The sell-side professional traders, these are strictly short-term traders. They, at times, act as market makers when the market is weaker or stressed or under retail news negativity status. They are the best in the world at what they do. They do all the corporate buybacks, 486 right now and counting. So they're busy buying back, which is a huge popular strategy for corporations to boost their stock price artificially. As buybacks come, earnings go up because you're reducing the number of outstanding shares. Very clever, very smart. And right now, our market isn't being supported by the dark pools because they're waiting to see how low can it go. All the buybacks are being supporting that market right now. That's why the market's up today. It's not because retail traders are rushing to buy some stock. That's not true. Professional independent traders who trade for themselves or for a proprietary professional trading company that provides liquidity and trading services to the buy side. Independent professional traders are a large group you never hear about. They actively trade, but not on the public exchanges. They're off on venues where you can't see their activity. At the end of the day, all the data is in your chart, but intraday, you're not seeing it. Okay, so be very aware. Be very careful being day trading because you are going to get whacked because you are blindsided. You can't see them. Professional traders are extremely important and you need to learn to follow them, and that's what I teach. All of the above have a unique footprint on the stock chart when they are trading. So if you can identify on the stock chart what's going on, you'll be able to see them. Their orders are routed independently from the routing retail uses and are often delayed until after the market closes for dark pool orders. So dark pools can delay their orders until all the markets are closed, and then they shove it to the exchanges, the national clearinghouses, to make sure that no one sees the activity during the day. So if somebody's saying you can see it, they do not know what they're talking about. Professional traders. This is a friend of mine, trading desk, Catherine Clay, and she now works for the CBOE. She sold her fantastic options system to CBOE, which uses it now. She is a market maker. She's an options market maker, and I learned so much from her. She's just amazing. It is not like in the movies. Professional traders do not go out drinking and taking illegal drugs and chasing women after work. I can assure you they don't do any of that. And the movies are crazy. They go home, or when they are working from home, they spend time with their families. The most common layout for professionals is similar to the one shown here with 8 monitors, with a powerful multi-million-dollar computer routing to a specific ATS or market maker and insulated from internet and electrical failures. You know, the average professional spends about $5 million on their system, and they have several internet accesses. You do not need such an elaborate system, but you do need to be able to piggyback and ride the momentum and velocity runs that professionals create with what I call nudge candles. These are brand new candles that I introduced to my students this year. You also need to learn that they are not day trading. Penny spreads do not provide enough profit and are huge risks for professional traders. So if you're day trading, you are trading against day traders, retail day traders. Students trading desk as a business. You need an office space to do your trading. You should have it already. Typically, a room in your home or even a closet will do. It needs to be a separate room, private, and not part of a family room or where a TV or gaming console is located. The IRS is very strict about this. You cannot have it in a family room or on a gaming console. I advise 3 monitors. That's what I use. And it's very useful. You will need a quiet place to study and work. Trading is a skill that, like all skills, takes time to perfect, and you will continually be improving your skills even after you are more successful than you can imagine right now. Raise your expectations. You accept such a low, flat amount of money from the market. It is sad. I'm very sad when I see that. When I look at somebody's, I'm going, why are you doing this? My students are often surprise themselves at how different their success is to what they had prior to training with TechnoTrader. This is because I expect you to succeed. I expect you to have 70 to 80% success rate, not 50% rate. You can't make any money that way. But you do need a separate room, and do need to, and you will be able to write off all of those expenses. Even though you are in a private office, you are never alone. Now, since AI goes out and listens to all the social medias and all the open forums and all the different places that you follow and recommended stocks and all that stuff, we are a closed campus. We have discussion groups with my pros, my semi-pros, and brand new students. Imagine being a beginning student, being able to listen to what the professionals and the semi-professionals are saying is pretty cool. It is really exciting. We have student mentoring sessions ongoing, and one-on-one tutoring and all is also available. So I'm looking for a very special person. I'm looking for a person who knows if they can just make their trading consistent, that they will be successful beyond beyond what they can imagine right now. I'm not looking for huge numbers of people to come follow me because I'm a niche market and I have a very small staff and we're focused on our students. I even answer students' questions on Sundays. Trading tools and resources. You will need a trading journal, as this provides the written evidence of your activity, trading as a business, and also historical data to consider and compare over time. I offer a version of my professional trading free with my courses to my students, and I update it regularly. This is where I analyze the market, and it can be used with an AI. You can take like a whole month's worth of your trading journal data. What's really great for AI is it's a data generator. It really does really well as a data generator. It is not a tool that can find a stock for you because it doesn't understand language. And the candlesticks are a language. When I look at a candlestick chart and I'm looking at the chart, I hear music because I have a musical background as well as educational. And if you're a programmer or an engineer, if you look at it and you think, this is a language, this is telling me something, rather than just looking for an engulfing white or a dark cloud or whatever, you need to do that. Trading journals are necessary. You'll have to have one. Trade Management Planner was created by Howard Johnson for our own personal trading that provides a monthly plan, your trading income that you can make. You set a goal. And it tells you how many number of trades you need to make that year, the capital you will need, the stock price range you can use, the risk assessment that you must do, and the profit potential. It sets it up so that, and all my students go, but, Martha, I can make that income from so few trades? It's like, yes, because you are not gambling. You're not rushing in. You're not using recommended stocks. You're not guessing. You know, and I can show you that. Trade calculators, also Howard, and other tools that streamline accuracy. One of the things that I noticed with our students is he noticed was the most common thing was mathematical errors. First, you need a trading journal. You need a trade management planner to make your trading, professional style trading. All professionals have management planners. Trading calculators take the guesswork out of it, and also they make sure that your math is correct. So you plug in the numbers for your stock you want to trade, and it spits out what you need to do. You plug it into your broker, and you're done. Scans, sorts, layouts, and parameters for your trading styles come from me. I have created special scans and sorts and layouts, and we can modify them and adjust them and tweak them for your own trading style. Trading simulator must be a real simulator, not a game simulator. Why? Well, these game simulators have, oh, I'll give you $1 million to trade. Do you have $1 million to trade? No, you don't. If you did, you wouldn't be listening to me. You'd be out there trading. Trade simulator must be a real simulator. You cannot use a smartphone and be successful trading stocks. Get over it. Market condition analysis scans. I will show those in a minute. Tell you what trading styles and strategies to use and what you need to do. Controlled bracketed order type. I've told this story before, but I'll tell it again. I came home. I love swing trading. I do platform position as well. And I'll go out and do my sport activity, which in the early days was ice skating. And I'd go out and come back because I could adjust my swing trades. I knew they were going to be fine. I came into the office and there's Howard laughing and talking. Who are you talking? Oh, Herzog. I'm going, the market maker from New York Stock Exchange. He says, yeah. So I wait for him to, he's laughing and they're talking like they're best buddies. And I'm going, because you can't talk to New York Stock Exchange market maker. That was years ago. They don't talk to people like us. And he gets up and he says, he loved my control bracketed order. He wants to put it on he asked permission to use it on his floor. And I said yes. And I said, of course you said yes. And today that controlled bracketed order, although modified, is still being used. It's so successful, and it takes a huge amount of the risk out of every trade you make. And that's part of our training. Brokerage account that is designed for trading as a business, no smartphones. You need to have an account that understands trading as a business instead of just using a smartphone. I know there's a lot of cheesy, what I call cheesy, brokers out there, but you need to have a professional, reliable brokerage account that is trustworthy and honest and has been around for 20 or 30 years, okay? Morning market open reports and market condition reports are provided in the course, and then their ongoing subscription. I have a morning market and report. I'll show you how I do it. And a market condition report, I write half of it in the evening about 8 o'clock as I'm eating my dinner. And the market condition report, I write somewhere between 2 o'clock and 3 o'clock in the morning, depending on the market conditions. This is for my students, so it tells them how the market's going to go. Futures don't tell you how the market is, only how the market's going to open, not how it's going to trade the rest of the day. Daily market educator, discussion groups, and communities within the Technotrader students only private campus fulfills all of your needs. So market condition analysis. I wrote these years ago, and it's like asking an AI. I say, computer, go out there and find all the stocks that moved with strong momentum for the day, upside, and then strong momentum to the downside. That tells me whether the bias is up or down for the next trading day. These were written many, many years ago, 30 years ago, and they're extremely reliable, and I keep tweaking them. Then I asked the market to give me all the stocks that have dark pool activity and some HFT activity, because HFTs chase the dark pools. They see that liquidity draw over time, and they chase it. So they'll gap up a stock. And then I say, give me all the stocks that are in bottom formations, because I want to know where the dark pools are doing. And then I ask for all the stocks and consolidations, because that's where the pro traders are. And then I ask for all the stocks that are turning down at a trading range, and I compare it to the momentum to the sell side, because that tells me when the market's going to shift and suddenly going to turn. And I did that, and just the other day, the day before yesterday, the market was going to go down. I told all the students that. And then a relational one saying, how is price improving hugely or moderately or slightly over the last month based on things. So I also get the information about what industries are having momentum, what industries are having accumulation, what industries are having bottoming formations, what industries are being speculated by the sell side institutions, Where are the pro traders going on? What are they following? It gives me all this information. So I can tell for the next market day with my students say it's very high, some like 99%. I don't know because I don't care about it, but they say 99. I haven't done the stats, so I can't own up to that or not, but that's what they say. Very reliable. I trust them. And then it also gives you lists of stocks to check and see if you want to trade those stocks in any given area, bottoming, platforming, whatever. Market condition analysis is my version of a total market analysis of who is in control of price. Dark pools or pro traders or retail traders, who's in control of price? What technical patterns are prevalent and reliable? How price will behave at resistance and support. It varies based on market conditions. What trading styles work best? You should probably have several trading styles. Most of my students have swing and position. Some of them do swing, position, and option. Which indicators to use or tweak, because it matters in different trading conditions. The inherent risk in trading specific styles, if you want to go for a velocity run in a bottoming market, it's going to be tough. What trendline patterns are common? Nobody talks about trendline patterns. I'm going, why aren't you talking about trendline patterns? Very important. There are many trendline patterns. Which entry and exit signals are most reliable? Nudges, resting days, pole vaults, hurdles. There's all these new candlestick patterns that are formed because professional traders and dark pools create those patterns. You've learned the old candlestick patterns and they're great, they're perfect. But if you want to be consistently successful, you have to keep up with the market and you're lagging behind. The strength of the price and volume patterns. Are they strong or weak? That comes from volume. Volume oscillator. Are you using a volume oscillator? Are you using price and time oscillators? Worthless. Throw them out. Volume. Volume. Dark pool. Tracking the dark pools. I have an indicator that tracks the dark pools all over the place. I know where they're going because I can see it on the charts. Market condition analysis tells you how and when to trade, who's in control of price, what to expect in near-term price action, where to find excellent picks, how to enter, and when to exit. Market condition analysis is your GPS of which market participants are actively trading, which are sidelined or waiting, and where we are in the overall long-term, intermediate term, and short-term trends. This provides the relational analysis needed to navigate the complex market structure. So relational analysis is one step up advanced for my more advanced students. Custom scans for your stocks and trades. We provide a ton of these. They're readily modifiable. We have an extensive library of scans that are available to you as a student to simplify and streamline your trading process, because I know everybody hates looking for stocks. You just want somebody to tell you what to buy. We also provide custom proprietary hybrid leading indicators. There's 5 that come with the course. These are the unique indicators reveal dark pool buy zones, dark pool accumulation, rotation, and lowering inventory, or rotation, slowing inventory. So these indicators are hybrid leading indicators. They literally lead price because they are telling you that dark pools are accumulating or rotating to lower inventory. And that tells you in advance before the price moves. Hybrid indicators signal before price moves. Your price and time indicators once were great, but they were written in the 50s and 60s and 70s. And this is 2026. You got to get with the game plan and catch up. That's why you are not consistent. This ensures more profit and less risk for your trading, which is what we want. So we have hybrid leading indicators. We have volume with moving average. We have balance of power, which often signals before the price moves. This is very important. We have our volume oscillator, which is awesome because when it spikes down to the bottom of the chart, it spikes up to the chart. It is telling you before price is moving down. It tells you the day before that that's going to move down. So you get out with the pros. That's a pro exit. That's a pro exit. Okay. So this is essential for swing trading. And then flow of funds moving in and out. These indicators tell you, I don't have the 5th one on this. These are hybrid leading indicators. They're modern. They're written for the new market structure. They're designed for dark pool activity, pro traders nudges, and all the other new indicators. Okay, so we have time. I am a boutique. I specialize in finding people who want consistent success, who want to trade as a business or trade and know that they are going to make this consistent income. I'm not for everybody, and I know that. I'm just looking for that student who knows they can succeed if they get the right education, who respects education as the key to success, no matter what you do. The proper education. Why do people spend tons of money at Harvard or any of the other Ivy League? Because it provides that extra power of the education. We also have a lot of information that you can have on the Learning Center and things. If you just want to come and visit our website, that's okay. I don't have a whole lot of salespeople, and we don't hound you because most of my sales come from student recommendations. They don't come from places like this. So I get out here and I try to help you and tell you what you're not seeing in the hope that one or two of you are thinking, wow, I think she's the answer. I do this as a legacy. I am retired. I could be doing a whole bunch of things, traveling around the world, having a good time, visiting everything. I've already done that. I want to leave something behind, something that will last. When somebody has success, then that makes the difference. If you want to start out and just visit our website, these are mini courses. You just have to register, and we're not going to hound you because I don't have people to hound you. This is for beginners, less than 2 years. This is for intermediate, 2 to 5 years. This is for advanced, people who have more than 5 years. So this is where you should go if you want to. I really should have taken this course 10 years ago. I hear this all the time, constantly. Results have shown it's a bargain. It definitely is. Paid for the course on my first trade, trading with using your scans, and that is a common response. Gains exceed the cost. Yes, they do. Changed my family's lives. This is the one that gets me all warm and fuzzy because I have changed so many lives, and they write me and they thank me. You've changed my family life. I've not only set up for me, I've set up for my children, my grandchildren, and my great-grandchildren. I'm leaving this legacy behind, and I'm training one of my adult children how to carry on after I'm gone. This makes me feel warm and fuzzy. This is why I do this. There's no money in education. A lot of people lose money in the market and they say, oh, well, I'll try to teach my strategy that stopped working, and then I can get some more money and I can go back and I can teach the strategy again. It's like, really? Um, no, beyond what I was expecting. Okay, so these are what we have, and we have a special for you. It's right here. And what you've learned today is just one of a piece of a professional trading process. The next step is learning how to structure your trading like a business and treat it like a business. Make sure you're making a monthly income because your time is worth something. So we have the Trading Entrepreneur 50% off for Mad Hatter attendees. It's learn how to approach trading as a professional business with structure, discipline, and planning. Best for traders who already trade but want more professional business structure. You can claim this, your 50% off, which is a huge, and within 48 hours at this HTTPS. So please, someone set that into the to the community bar there. And you also, if you're not ready for that, or you're not interested in that, then you have a free 1 hour starter course. You can claim this. You have a 7-day access within the first 20, but you need to register within the first 24 hours. And it's HTTPS TechniTrader. I am follow Dark Pools. Please also put that into the chat box so that people can get access to that. Thank you very much. And I will answer questions. No questions? I've
I have a
been,
question. Tell us
sure.
your oil story.
My oil story,
Yeah.
the oil story, let's see, I told my students to follow the sell side institutions because the sell side institutions love oil. They'll be buying it before some event happens, and they will be selling it short before an event happens. And a lot of my students made a lot of money following the sell side institutions and tracking what they were doing. In my market condition scans were identifying, oh, look at, oh, oil is going down, but the sell side institutions are buying this like crazy. It's like, what are they doing? They knew in advance. They knew before the Iran war started. And then they know every time. So it was a clever strategy just by observing what the sell side versus the buy side institutions were doing. The buy side institutions do not hold much oil at all. They're not into anything that's highly speculated. But the sell side institutions love it. They're in and out of it all the time.
Yeah, I have a different theory on that. I think a lot of institutions just always have an oil long. They have no idea when the next war or geopolitical event is going to happen. They just buy it as an insurance policy for the rest of their portfolio.
No,
And let's face it, this war was the best advertised war in history.
yes, but you have to understand the buy side, the sell side, yes, I will agree with you there. But the buy side institutions, if you look into their, because they publish on NASDAQ, they publish all of their 4,000 to 5,000 holdings. They have a list of everything and the percentage of what they have in each industry. So it's not a hidden thing. It's not some subtle thing that's going on. It was the sell side institutions. The buy side institutions do not gamble or take risks like that, and they do not hold a lot of energy stocks at this time. None.
Well,
They hold a lot of solar power because they see solar power, and they hold a lot of the producers, independent producers. The independent producers are creating all kinds of new technologies because one thing that they're aware of is that corporations have gone away from oil. They all the major corporations, the top ones that you listen to, all have built these huge, vast AI technology structures, infrastructure, mostly in the desert areas and other areas where they could buy the land cheaply, because it had solar power, because they had access to water that they could recycle and everything. So Apple, Amazon, NVIDIA, you name it, they all have that. And the producers, the independent producers are producing energy for them because they put up turbine powered things and all this. So everybody and the buy side institutions are new energy technologies. They're also looking for solid states. They're investing in solid state batteries, hugely solid state batteries, because that is going to tip the whole iceberg. And then suddenly oil is going to be in less demand in the US market. So their investments are solar, all the alternative energy systems, and producers, independent producers of energy, and all the alternatives. So they're into that, and solid state batteries. They're heavy into it, heavy. Because I checked to
all
see.
right. Well, thank you very much. To take advantage of Martha's offer, please look in the chat box on the right. There you find a link to her offer today. And Sebastian, go ahead and put it up so it's in the bottom. There it is. Um, okay, so that takes you to the dedicated sales page, which is only available today. So, Martha, thank you very much for joining us today. It was very interesting what you had to say, and we look forward to having you back in the future.